Hello and welcome to RCLCO's May Economic Update. I'm Scott Bommarito, here to summarize a few of the most recent developments. The 10-year US Treasury yield has been volatile over the last month and a half, fluctuating in the range of about 4 to 4.5%. It fell below the 3-month yield in early April in the wake of the tariff announcements. Historically, yield curve inversions have been a precursor to recessions, so April's inversion likely indicates that markets viewed the tariffs as posing a recessionary risk. The 10-year to 3-month yield spread has been volatile as the global tariff regime develops, but the spread corrected in mid-May with the 10-year yield around 4.5% and the 3-month yield near 4.4%. In other interest rate developments, the Federal Reserve held the federal funds rate steady again in its May meeting at a target range of 4.25 to 4.5%. Most economists expect one or two cuts of 25 basis points each in 2025, with further cuts likely to come in 2026. So far, tariffs' inflationary risks have led the Fed to keep rates elevated. If the labor market deteriorates later in the year, the Fed may face a policy dilemma as it balances its dual mandate to maintain stable prices and full employment. Thankfully, though, the labor market has held up so far. Total year-over-year employment growth registered a healthy 1.2% in April, and average wages grew 3.8%, outpacing CPI inflation, which totaled 2.3%. Performance was mixed across employment sectors. Education and health services emerged as a clear outperformer, with strong employment and wage growth over the last year. Manufacturing, information, and professional and business services each posted strong annual wage growth despite modest job losses. While tariffs have dominated the headlines lately, the Trump administration has continued to develop plans to shrink federal government payrolls. Nationally, Oxford Economics forecasts that federal government employment will shrink by roughly 2.7% annually over the next 4 years. The sharpest rate of contraction is predicted in Washington, D.C., which is, of course, by far the largest city for federal government employment. On the other end of the spectrum, Norfolk is expected to fare somewhat better, with more modest annual job cuts of 0.7%. Federal government employment is projected to decline by around 3% in most other major cities. Elsewhere in the economy, consumer spending continues to hold steady, with total retail sales up 5.2% over the last year. Motor vehicle sales led the annual growth figures and were up 9.4%. Much of that spending growth came in March as consumers front-loaded vehicle purchases before the 25% tariff on automobiles took effect on April 3rd. April sales were down slightly from their elevated March levels. Food services and online retailers also recorded healthy annual sales growth, but in the near term, tariffs look likely to pose a downside risk to consumer spending, although the magnitude of that risk is difficult to forecast at this point. That concludes our May economic update. Thank you for tuning in, and don't forget to follow RCLCO for more news and analysis.